Hello everyone, we're back again with another one. I hope you're all doing great. So as you already know, we are currently back on BTC USD, what we are anticipating and what we should be expecting from the market. So today we are going to do a little bit of fundamentals and sentimental analysis and then back to the technicals. So firstly, yesterday, if you watched the previous video, we talked about there will be a decline coming from BTC after that first impulse that we had. So we need to have that balance back in the market before we go for another bullish leg or another anticipation or another leg in the market. So currently right now, as you already know, yesterday there was a CPI data release, which was a huge data that was released, and as we already know, if you go down here, yesterday we had a CPI release which was the highest over 3 decades. There was an increase over 6.2%. so as you already see the key points there, the Labor Department said on Wednesday, October consumer price index was up by 6.2% year over. It is the highest reading in 3 decades. So meaning the inflation reading rate was the highest over 3 decades. So there was an anticipation of a huge inflation coming in, so in the economy. So due to that data release, investors went out seeking on what investment that can hedge them against inflation, the common inflation meaning. So the common inflation, due to that, there was a huge surge of crypto and gold assets. There have been a lot of flow into the market. A lot of hedging were made due to that release data. So a lot of investors went into it. So due to that information, meaning to say is that we are going to see a lot of more huge supply getting into the market of cash inflow going into crypto market in general, due to that inflation data that has been seen and what we're anticipating. More inflation will be coming. So due to that, there will be a lot of hedging that will be made, and what the best asset for those hedges are Bitcoin, gold, etc. So those are the most valuable asset that investors are looking. So what you need to take on this is that with this coming data coming out, a lot of investors, the bigger investors, are going to have to hedge on inflation. So meaning, and the Bitcoin is one of those investment that gives out a higher percentage of investment. So meaning by it gives on, if you check at the bonds, the cash and all other, it all usually has a fixed amount of investment return, but Bitcoin has a higher percentage of return. So so due to that, we had that huge 2% rose over the period of, but after that huge rose up, we had that pullback that we were anticipating from a technical point. And as you already can see already, yesterday we are at the great trader. So that was when I was talking about the FOMO in the market. So from this data coming out into the market, a lot of people will be going into the market. So there will be a lot of FOMO going into the market because of the bigger boys, the inflation is telling everyone, okay, you need to buy Bitcoin to hedge against inflation. So even the smaller boys also will be like, okay, we need to buy some assets so that we can hedge against this inflation. So as you already know how the big boys position their position in the market, the sentiment is indicating the sentiment is indicating that there is a huge FOMO in the market. There's like an extreme, and today we are at an extreme radar, which everyone is just thinking that, okay, Bitcoin right here, Bitcoin, crypto. So a lot of cash inflow will be in the market. So a lot of FOMO money will be going through Bitcoin currently at the moment as we are speaking. So what you need to intake as a smart investor is that when the bigger investors are getting into the market, they usually accumulate. So what you need to take that, as we already know, the bigger investors are hedging on Bitcoin. So what they usually do is they average them their position. So meaning any investor who's getting in, the bigger voice, when they are positioned in the market, they usually position for a long period of time. So meaning they will be averaging down, they will be accumulating their position. This is what we are anticipating on the market. We anticipate a more accumulation before the pump. Not to say that BTC is not in a bullish run. BTC is still in a bullish run, but we have an extreme grade FOMO, and what we already know as an investor, the investors get into the market by averaging down their position. So meaning they will have to they will accumulate, and they accumulate position over a long period of time. So they are not people who just put in their money and expect it to rise up by the next week or couple of months. No, this is a huge position that will be hedged. So and this hedging position are usually average position that they see on them. So what you need to intake is that this data coming out is just telling you that there will be an accumulation before a huge surge in price. So meaning they are just hedging right now. Right now is the time for them to position themselves in a hedging asset. So this is a time to position themselves in the asset. So this is not a time that we are going to anticipate the next month. No, we are going to anticipate a more accumulation. From a fundamental dissection of what we have just read is that the bigger boys are getting into the market and they accumulate. As you already know, this is what indication of FOMO in the market. The sentiment is telling us there's a lot of extreme greed, and what you already know from the sentiment is like when everyone is greedy, that's when you should be fearful, and when everyone is fearful, that's when you should be greedy. So having that in mind is that this is a time for you to actually be more cautious and long in position as a short-term trader. As an investor, it's time for you to get into more accumulation, so you'll be stacking up your position, meaning by extreme greediness is getting in. So a lot of people will be seeing that decline, and a lot of people will be like, oh shit, liquidation is coming and all this sort of stuff. But as an investor, the bigger boys are just stacking up their position, and that's what happens in the market. When they're stacking their position, this is when we actually see a lot of a decline and a lot of correction in it, or accumulation, if you can say. So let's get down to the technical. So as you already, this is we are currently on a live chart right here. So firstly, we are currently on a 4-hour time frame, and from a technical standpoint, this was an all-time high that was formed around October. So it was formed at the price region of 68,000 watt, and we came in and we took out that high and we took it out as 68,000. And looking at it from here also, we took that CPI data came out, that 2% increase was this one that we also took out this high. So meaning to say that all those FOMO money that has been already taken out going long in the market, this is their position whereby they actually got liquidated. So meaning all the stop orders, all the buy stop orders that have already been induced by the smart money. And as from a technical standpoint, you already know the technicals never lie. If you already see from this low that we had previously, we had something like this. So we had this parallel trend line, and if we already, as I was talking about yesterday, we had this parallel trend line between these levels, and we had broke up as we are having something like a double bottom. And once you already know, there's a pattern we already know, which is like a turtle soup pattern, if you're familiar with that technical term. So this is a pattern whereby above here was the liquidity that has been induced in the market by the smart money. And as a short-term trader or as a smart trader, this is the opportunity for you to take opportunity at this decline that will occur in the market because of the accumulation that will be made by the smart money. So as a short-term trader, or as a short-term investor, or as a smart investor, you already know this is a position whereby you should be stacking up position, because you have a more lower price coming in the future in the market. So, and from the technical standpoint, we already have this parallel trend line which we are connecting in, and we have already broke below it. So what we're anticipating is to have a little bit of more retest at this region. Immediately after we had this retest, from a technical standpoint, what we're anticipating is a breakout, and with this breakout we will anticipate it down to this low. And also you should keep in mind we are still in a bullish run. This breakout is just an accumulation. This is not like a breakout of a changing trend. No, we are just accumulating, and we have more lower price as the bigger investors are getting into the market. So meaning they will need to to average more their position. So they are just positioning right now at the market. So this is why we have this decline. And from what we're anticipating from a technical standpoint, we have this pattern that has already been occurred, plus the confluence we had of the extreme greediness in the market. Keep those two key points in mind. We have extreme greediness. We already know that there will be cash inflows, a lot of supply in the market of cash flow, FOMO, and technicals is showing us that we have already overbought at this moment. So what we're anticipating is to have any pullback around this region. Immediately after we have the pullback, we are going for a short position that we can sell off down to this level before we can think of, after we finish the accumulation, then we can think of. So now what I'm saying, this is the end of the year. We are coming to the end of the year season. So what we're anticipating from BTC is right now, from a short-term trading perspective, is to have this decline as long as we maintain this high region that we have already induced liquidity in the market. What we anticipate is to have this test of this region. Immediately after we test this overall region, we're anticipating for another bearish leg down here, and after that, then we can anticipate more of a correction. The correction can be completed up to this region. We can induce more liquidity there. We have few liquidity order and demanding levels at this region, so we can anticipate a push to the upside down. So right now, from a short-term trend perspective, we are anticipating a breakout to the downside, and that breakout is just a explanation of the smart money just positioning in the market, so that they can hedge against inflation from the data that has been released. So I hope this video is quite helpful for everyone. I hope you understood the point I'm trying to portray on this. So everyone, please like the video, subscribe to our channel, click on the link on the description. You can join our free Discord channel where we give out trading ideas and information about what we are expecting in the market over all altcoins and general market overview. So I hope you, and also make sure you like the video again, click on the link on the description also, and subscribe to the channel.